Hello, and welcome to Explain the Charts, your channel for in-depth technical and fundamental analysis. Today is November 24th, 2025, and we are looking at a very tense moment for the Nasdaq 100, represented by the QQQ ETF. The big story dominating the headlines is the market's stunning reversal last Thursday, November 20th. What started as a massive rally of over 2% on strong Nvidia earnings completely fell apart, ending the day down over 2%, with the Nasdaq Composite dropping a staggering 4.24% from its high. This dramatic turnaround has injected a heavy dose of fear into the market, bringing the AI bubble debate to the forefront. News reports from CNBC and Yahoo Finance highlight that the initial sizzle from Nvidia's strong forecast was extinguished by the decreasing probability of a Federal Reserve rate cut in December. This shift in sentiment was reinforced by a delayed September jobs report, which came in stronger than expected, suggesting the economy is still too hot for the Fed to consider easing. We also saw reports of influential figures like Michael Burry betting against AI leaders and Peter Thiel's fund selling a large position in Nvidia, adding to the bearish pressure. So we have a classic conflict, a powerful, long-term AI narrative versus immediate concerns about valuations and macroeconomic policy. Looking at this daily chart, we can see the broader context of this price action. The uptrend that began in April of this year has been incredibly strong, pushing the QQQ to an all-time high near $637 at the end of October. However, the last few weeks have been a different story, with significant volatility and a sharp pullback from those highs. Let's zoom in on the price action from September onwards to get a clearer picture of the key levels. The uptrend accelerated sharply in late October, but that move has now been almost entirely retraced. The peak was made on October 29th at $637, which now stands as our key long-term resistance level. Following that peak, we saw a sharp decline, a brief rally attempt, and then the massive reversal candle on November 20th. That day's trading was brutal, with an open near $611 and a close all the way down at $585.67 on extremely high volume of over 117 million shares. This type of high-volume reversal is a significant technical signal, suggesting that sellers have taken firm control of the market in the short term. The low of that candle, around $584.75, has now established itself as the most critical support level to watch. If that level breaks, it could signal a much deeper correction is underway. The support area below that would be the consolidation zone we saw in early September, right around the $570 to $575 range. On the upside, the psychological $600 level, which was briefly support, has now turned into initial resistance. Above that, the area between $610 and $615, where the market struggled before the big drop, will be a major hurdle for the bulls to overcome. Now, let's switch to the 1-hour chart to analyze that reversal day more closely. Here we can see the anatomy of the November 20th collapse. The market gapped up significantly at the open, fueled by the positive overnight news from Nvidia's earnings. Price action was strong for the first hour, pushing up to a high of $614. However, that momentum evaporated almost immediately. Sellers stepped in aggressively, and you can see a series of large, red hourly candles that drove the price down relentlessly throughout the entire session. There was virtually no bounce or support found until the final hour of trading, where it bottomed out just under $585. This is not a healthy sign. It shows a complete exhaustion of buyers and a panic-driven shift in sentiment. The attempted bounce on November 21st was weak in comparison, failing to reclaim even the midpoint of that massive down move, which is another bearish sign. Drilling down to the 15-minute chart for the last couple of days gives us a micro-level view of the current battle. After the huge drop on the 20th, you can see price tried to form a base on the 21st. We saw an initial bounce off the lows near $580, but the rally was capped around the $597 level. The action since then has been choppy and sideways, largely contained between $585 and $595. This indicates a period of indecision in the market. Bears are likely reloading for another push lower, while bulls are attempting to defend the critical support level established on the 20th. The low volume during this consolidation compared to the sell-off volume suggests a lack of conviction from buyers at these levels. Any attempt to rally that fails to break and hold above $597 to $600 will keep the immediate pressure to the downside. So, let's go back to the daily chart and summarize what we're looking at for the short and long term. The long-term uptrend is now under serious threat for the first time in months. The key takeaway is that the market character has shifted from buy the dip to sell the rip in the immediate short term. Let's recap the important price levels to watch. Major resistance is at the all-time high of $637, with more immediate and significant resistance between $610 and $615. Critical support, and the line in the sand for the bulls, is the November 20th low around $585. Secondary support can be found in the $570 to $575 zone. Now for some unbiased predictions. The bearish scenario seems more probable in the very short term, with a likelihood of about 60%. If QQQ breaks and closes below $585 on the daily chart, especially on high volume, it would reinforce this outlook and likely lead to a test of the $570 to $575 area. The bullish case, which I'd place at around a 40% probability, requires the $585 support level to hold firm. For this to happen, we'd need to see buyers step in with conviction, pushing the price back above the psychological $600 mark and holding it. A break above the $615 resistance would be needed to suggest the correction is over and the uptrend is resuming. Look for upcoming economic data or Fed speeches as potential catalysts that could break this indecision. The market is clearly reacting to concerns about Fed policy and tech valuations, so any news on those fronts will be critical. Ultimately, the price action around the $585 support level in the coming days will tell us a lot about the market's next direction. Thank you for watching this analysis on Explain the Charts. Please remember, this is not financial advice. This video is for educational and informational purposes only. Always do your own research and make your own investment decisions.